Bitcoin is back trading at $93,000. It's time for an update because the last couple of days have been absolutely insane. On Friday, Bitcoin flash crashed to about $78,000. And over the weekend, it almost completely retraced that and back to the breakdown point. We're now at 93K. So what has happened? What is the chart looking like? And what does this tell us? This is what I'm going to dive into in today's chart. So grab yourself your favorite beverage. Let's dive in. Of course, if you do enjoy these updates, smash the like button, share this with a friend, someone who you think that would find this interesting. And if you have any questions, of course, leave a comment down below. So I want to start this out with the fact that this chart, I think, explains exactly what has been happening. And as I always say, and what a lot of traders and chartists will tell you, is that the charts show you what is going to happen before the news comes out that most non-traders will attribute this to, right? So what normal people do and what the media does and social media accounts and articles, when something happens, when the market goes up, big or down, they'll be like, oh, this person said this, or oh, this law came into effect, or oh, blah, blah, blah. But in fact, the charts always hint at what's going to happen. And then something happens at some point that triggers what the chart is suggesting that is going to happen. And why this is the case, I don't know. It's maybe because there's insiders that already know about the big news event, and those people start taking action based on what they know is coming, and they have this asymmetry of information where those insiders in the know already start to take actions on the price, buying or selling positions, which starts to affect the price, which, if you understand how charts work, basically allow you to have an understanding of the probability of where this is going. So, long story short, the Bitcoin CME futures. This is a chart where it trades on the CME exchange, which means it trades according to normal stock market hours, not 24/7 like Bitcoin. The spot Bitcoin is 24/7, 365, right? But CME futures, they close every single day and they are closed on weekends. So, because the Bitcoin price is 24/7, if the CME closes and the Bitcoin price moves after the CME close, and then when CME reopens, if there's a discrepancy, then what the price does on these charts is it jumps. It creates these gaps where it's not one candle and another right next to it, but the gap between those openings and closings. So, as you can see here on these charts, what tends to happen, and now this is not a 100% rule, when you see a gap on this chart, it's not like it has to be closed the next day. Sometimes it takes weeks or months. There can even be cases where a gap will not be closed. But a large amount of the time, these gaps tend to be revisited by the price, and then these gaps are closed. So as you can see here on the chart, this happens many, many times. Here's examples. A gap, it went up first, it came back down. Gap here, closed. Gap here, closed. And we have had this gap over here since November, when it jumped through from 77,000 and it went all the way up. Now, as you can see here, again, there was no hard rule that it had to be closed the next day or the next week. It literally took all these weeks for us to go and close this gap. But, as you can see, on Friday, we had this wick perfectly into this gap. And we could say it actually didn't fully 100% close it, but it came pretty close. So maybe this is all that we get. And the interesting thing about this theory, about these gaps, is the fact that you can use them to help you understand when you could be potentially closing positions, opening new positions, taking trades, etc. Because even though there is no hard rule, you can see it with your own eyes on the chart. This is respected a lot of the time. Now, what happened is that when the price broke down from this level over here that it spent weeks above, right, above this 93,000, once it finally broke down, it gapped down below. So it created this new gap over here. We broke down, we closed this gap, and then immediately the markets closed over the weekend. So now we have a massive gap over here, but it went straight to fill this gap at 93,000, as you can see. And now to close the gap down below, we'd have to go down to about $85,000. So it is very, very interesting. These gaps get filled over and over. So now this gap is closed. This gap is closed over here. But we still now have a big gap between 84 and 93,000. And then it remains to be seen what is going to happen now And is this gap down to about 85, 84,000? Is it going to drop back down again and fill that gap? So that you have this understanding now, I want to look at the normal chart, the regular chart, and then we bring out the normal analysis to help us determine what are potential scenarios and potential options. But understanding these gaps and looking at the CME chart on a daily basis, the daily chart of the CME, you don't have to look at it every day, but understanding these big gaps, knowing that it is likely at some point that they will get revisited, setting alerts there can help you make better decisions. Like if you were short, you could have exited around this area because it was likely going to create a bounce. And then you might have been able to take a bit of a bet and go long. And then again, when it hits 93, then you know that is a gap that was filled and you could take profits once again. So it is very, very helpful in terms of trading and entry positions, exiting and closing. Okay, so now we're back at a normal one-day chart on Bitstamp, the 24/7 crypto price data and price movement. And as you can see here, there's obviously no gaps because it's 24/7. So each candle is perfectly consecutive to the next one. So what you can see over here, let me explain this as simply as possible, is we got above this level over here, 90 to 93,000. And this level acted as support many, many times since November. Now, in technical analysis, the more times that price tests a level, the more likely it is to eventually break down below it. That is just how things work. So tested it many times, bounce, and eventually we got the breakdown. We went from 90 down to 78,000, which was the CME gap that I just told you about. From there, we had a massive run to the upside. Now, what was interesting to know is, again, like I said in the beginning, the news tends to follow the charts. The charts show potential or possibilities first, then some news comes out and it happens. So we had BYBIT get hacked around about over here. They got all the ETH hacked. We had a little bit of movement and then we had this breakdown over here. Now, what caused the pump, or what most people or normal people would say caused this pump, was the fact that Trump on his Truth Social posted a tweet saying that there is going to be a strategic reserve for digital assets, a stockpile, including XRP, Solana, and Cardano. And then he made a second tweet where apparently he forgot to mention Bitcoin and Ethereum the first time around, so the second time he mentioned that. So as soon as this tweet came out, the price went from about 85,000 all the way up there to 93,000. Now you can say, yes, that happened at the exact moment the tweet happened, but this price dropped perfectly into the CME gap, so that was predictable where it would have bottomed. Then it created a CME gap back at 93,000 like I showed you earlier, and that is exactly where the price went to. So if you didn't know about any sort of news and you were looking at the chart, this chart still makes perfect sense. It dropped into the 78,000 CME gap, then it pumped right back up to the breakdown point, right? Keep in mind, this is the exact level from where everything broke down. It retested that, which often can happen, and the CME gap filled. So this is all technically perfectly explainable. The question is, what happens from here and where to next? So I think it's pretty simple. I think if we can reclaim this breakdown point, 93, 94,000, which it's currently at, we need a couple daily closes and we need to get above this level over here. We need to flip this to support. We need to get above this descending trend line and above this breakdown point. And from there, I think we're probably going back to at least 108 and maybe a next run up. If we can reclaim this, I think that's the target, right? We are still in a high time frame bullish trend. Like I've been saying, we're above the 50-week moving average. We're above 74,000. So if we reclaim this, we could probably target at least these highs or maybe new all-time highs. Okay, that is a possibility. But if we reject from this level right here where we are, between 93 and 96, I don't know the exact level, but somewhere around here. If somehow this doesn't work and we reject, we could go back down to retest at least this level, 80 to 78,000. And if that fails, then we're looking at potentially as low as 70,000. So that is how the charts work. It's all about possible scenarios. And we don't know which one we're going to get, but we know if we flip this level, then bullish continuation becomes more likely. If we get above 96,000, we're likely targeting 108,000 or maybe 120,000. If we reject between 93 and 96, then we are probably going back down to at least retest kind of this level over here, say between 84 and 78, most likely closer to 82 or 80. And if that keeps going down, if there's bad news, if there's continued selling, and we get back below this level, then the next level of support likely becomes around about the 70,000 level. So for now, this is how I can approach the charts. And depending on what happens today and tomorrow and the rest of the week, we are going to get a more likely outcome of where this is going, and we have a better chance of predicting where the next move is going to go. Like, for example, Trump said he might make another announcement today about digital assets. The White House is also hosting a crypto summit on March 7th, so that's later in this week, and depending on what they say and what they announce at that summit, the price could continue to moon, or it could reject and it could dump. So we have the three scenarios here, and based on this, that is what we could be seeing. And once again, we are still in a high time frame bullish chart. As long as we are above this 50-week moving average, which as you can see now clearly has confluence here with this previous all-time high. So I would say this whole area over here, basically from previous cycles to here, this is now massive, massive support. And as long as we're above here, the trend is still bullish and we could still continue to new all-time highs. Now in the short term, whatever happens, we could come down to retest it once again and then still continue higher. So we could still visit 70,000 and still be in a bullish trend. We could also from here, if this holds, we could also go higher from here, and then once that is over, continue to drop. So those are all the options. That's what's on the table. Let's see what this week brings us. And of course, the whole altcoin market is pretty much tied to what Bitcoin does. So if Bitcoin can hold steady or continue going higher, it's going to be beneficial for altcoins. If Bitcoin's going to drop back to 70,000, well, altcoins are probably at the very best going to hold steady or probably continue to drop also. If you enjoyed this video, smash the like button, make sure to follow and subscribe down below, share this with a friend, and I will see you in the next video.